Welcome to the What's Happening Birmingham video podcast.
Hello, everyone. This is Jarvis SCorp with What's Happening Birmingham. Back again, second segment with Talibah Bayles of TMB Tax and Financial Services. And I love the t-shirt, Bankable CEO. Yes. So this segment, like I told you all in the previous segment, we had to kind of break it up, make it in, because as business owners, we need a separate thing because there's a lot has gone on in 2021. And if you are watching this video and you own a business, 9 out of 10 of you all probably got a PPP loan or a grant or something that the government or some organization has given to you because your business was affected by the continuing COVID-19 pandemic. So let's start with that, Talibah. What do business owners need to know when it comes to filing their taxes?
Man, oh my goodness. What don't you need to know, right? It definitely has been, it still unfortunately continues to be a whirlwind if you're a business owner and if you're trying to stay open and provide for your families and run a profitable business. I have to lead though with you can absolutely do it. And it goes with what my shirt says, which is the bankable CEO. This is something that is really at the top of my mind every day. And that is reaching out, working with, having results for Black and minority owned businesses when it comes to doing everything that we need to do, unlocking the information, connecting you with any resource possible so that you can be bankable, which basically means so that you can get the access to the funding that you need. Because Jarvis, just like you opened, there are definitely listeners who were able to take advantage of PPP, who were able to get an approved EIDL loan, but there are absolutely, oh my goodness, probably millions of us who did not, because they did not have their taxes completed, or they do not have the ability to keep track of their expenses. So I really want to start there. And I think that in starting there, we'll answer those questions about, well, what do I do if I did get the funding? But for the main thing that I have to say is, go to an expert that knows and has a track record with working with businesses like you, and because you go into, say, a big box tech brand tax office, you walk in, I'm not going to call out any particular brand because I ain't trying to have y'all come for my money, but just because you go into an office that has a track record or has a commercial on all this other stuff does not mean that they specialize in preparing taxes for business owners or working with business owners. So my first challenge to you is to identify someone, vet them, make sure that they have a tracker with working with business owners, because this is a conversation that you want to be having, not just in the tax season months, year round, because that's how you're going to truly be able to get bankable, to level up your business, to identify, I say opportunities, but they're challenges that you need to address in your business. So I'll go specifically to what you asked as it relates to PPP. The main thing, or I guess the kind of last little thing that remains with PPP is making sure that you request forgiveness for your PPP. It's not automatic. Okay, it is not automatic. And towards the tail end of, it might have been the middle or the end of last year, a lot more banks came online with you being able to go directly to SBA.gov's direct forgiveness portal for you to log on, create that account, and be able to request the forgiveness directly from the SBA's direct forgiveness portal. So I want to talk about that. You want to make sure that you do that. And if for whatever reason your bank has not been clear as to how you request forgiveness, then you're going to have to call them, or go online or something, but just don't wait. So if you know that you got sort of that last round of PPP and you can't remember if you requested forgiveness, then today, I want you to know if you did or not. Because if you forget, then now you have a loan. Right. And that's really not, I'm sure, was not your intent, was to have a loan. You wanted to be able to say that was a grant. So to make sure that your PPP loan becomes a grant that you don't have to repay, make sure that you do request that forgiveness. And if it's not clear to you, go to your bank and ask them how they are having you do that.
Now, does PPP and any grant, when it comes to you tracking with your gross receipts, does that count as gross receipts?
When you're so PPP, obviously we're not applying anymore, but I want to pull out gross receipts because of the conversation that you and I have had before. And also because of this new rule, right? That payment platforms like PayPal, Venmo, Cash App, and the whole crew of them have to start, tracking anything over $600. So let's talk about the gross receipts. Let's talk about that in the whole context. So that goes into that record keeping, right? So I know, that for whatever reason, we continue to have, an accounting software lower on our list. I'm not even going to take up a lot of time on that, but I want you to understand that you have to have an efficient way in which you are tracking all of your income and all of your expenses. And now that we have that new rule that started January 1, if you use any of those payment platforms that I just mentioned, you're going to get a 1099 from either of those. When you get a 1099, that goes directly to the IRS. So let's say that you transact business on PayPal, and that's how your clients pay you. So now let's say it's $10,000. PayPal is going to, in February of next year, or at least by February 1 of next year, you're going to get a $10,000 1099 from PayPal. That's going to be something that should be included in your gross receipts on your tax return. It has to match because and this is so important, Jarvis, because this is going to be new. Like, the 1099 world has unfortunately been grave, right? Because a lot of people are like, oh, I either get one or I don't get one, so forth and so on. You will be getting one from if you use either of these payment platforms. So it's important for you to lock in on this conversation. Don't throw it away. Know that the IRS gets a copy and they're going to be expecting for you to file that income exactly as it says on there. So let's add in Cash App. If you use Cash App, we already got the $10,000 from PayPal. Let's say you got another 20 coming, that you transacted on Cash App. Well, you're going to get a $20,000 1099 from Cash App. The IRS is going to get a copy of that 1099. From Cash App. So therefore, you now have $30,000 in gross receipts that the IRS is going to expect that you will file on your business tax return. So even if you do not have an efficient way in which you're keeping track of all the other money, like your cash payments, or if someone's paying you via check or whatever the case may be, at the bare minimum, you're going to have to file those gross receipts that you get a 1099 from, period. Okay. And so that's at line 1 of most of the tax forms, Schedule C, 1120, 1120S gross receipts. Okay. Now, I want to talk about cost of goods sold, and it's really, this is not a one size fits all. So this is where I really do have to encourage you to get with your tax professional, your accountant, whoever does your taxes, to make sure that you are appropriately using cost of goods sold. Typically, right, our inventory-based companies, if you have a tangible product, a t-shirt like I do, or anything that's a tangible product, you for sure have cost of goods sold because inventory is rolled up in there. There are service-based companies that use that as well. But I always lead with cost of goods sold really being an inventory-based, product-based company. The surprise that we got, though, Jarvis, with the cost of goods sold, particularly surrounding EIDL, was that if you made, still use that $30,000. So if you made $30,000 from PayPal and from Cash App, remember, and then you had $30,000 in cost of goods sold, well, then your gross receipts are zero. Just because of how the tax form is, right? And particularly, we'll do the Schedule C because that's the conversation that we had. And so then that reduced gross receipts. So then if your cost of goods sold is more than what your income was, you didn't qualify for EIDL. Now, I will say, a lot of folks didn't and don't understand that, especially if you're self-preparing or if you're going to, a tax professional that doesn't work with business owners, right? And so you had a whole chunk of people that were like, wait, I don't understand why I don't qualify, or I don't understand, why my max loan eligibility amount is so small. I thought, I made $30,000. I'm supposed to qualify for $60,000, and you don't, because that cost of goods sold reduced it. So that's something I definitely wanted to mention under any context, but certainly when we start talking about gross receipts, because even though PPP is gone and EIDL has wrapped up, I mean, obviously they're still approving stuff that was submitted before the deadline. I'm here to tell you, I don't think that I don't have, this is just a crystal ball I'm looking into based upon, my talks with DC and the research that I continuously do. Yeah, I don't think we're going to have a lot more grants. I would be shocked. I really would be shocked if there's another PPP-like opportunity or targeted advanced supplemental. I would be shocked. Then y'all would be able to refer to this episode as you were wrongfully, but that's all good because I would still love it because now now we can help you do that. But I say all that to say that what I've seen come out of DC, particularly in the Build Back Better bill and other committees and discussions, unfortunately, what it looks like right now is that, hey, we're coming to save the day and we're coming to help your business in the form of a loan, and a SBA loan at that, a 7A or a 504, SBA loans that have been around for decades. That's where, if we have any traction on Build Back Better and saving the small business economy, it's all been in the loan terms that I've seen. And so under that premise, that's why, we have really put the Bankable CEO initiative ahead of most of the services that we offer, because if it's $1 billion appropriated by DC for Black businesses to get SBA loans, well, we out here trying to make sure you're able to get it. Because why let that money go to waste, right? Yeah. And in that instance, your gross receipts and all that stuff gonna have to be on point.
Now, with businesses, and the time I'm taking this is in February that I'm taking this. Shouldn't, like, if you provide service to people, should you have already gotten your 1099 from that business?
Yeah. So that's a really good question. The deadline for W-2s and 1099s, your mortgage interest statements, student loan interest statements, all of those types of statements was January 31. Okay. But so therefore the quick answer is yes, you should have gotten everything. But I I'm cautiously saying that because, life happens. And sometimes the business that you did business with may not have done that yet. So you might want to pick up the phone, shoot an email, text, or whatever, and say, hey, well, I know that I made more than $600 from you. Are you going to do a 1099? You know what I'm saying? And so if they say, for whatever reason, they're not going to do a 1099. I mean, I work with real business owners, so I try to keep it as real as possible. So, if that business is not going to be filing a 1099 for whatever reason, then you have everything. But if the response is, oh yeah, we had a couple of things happen, and so we're behind on filing everything and getting everything in the mail, which happens, like I said, then you don't have everything, and you want to wait before you file your taxes because you want to see, you need your 1099 from them to make sure that you're matching that when you file your taxes.
Okay, so another thing I want to mention too, that also on that Schedule C, what classifies as like other income?
Okay, very good question. So on the Schedule C, that's typically where your other income line, your 1099s populates that. So, and this is a very good question. And I tend to get into the weeds, but I very, very good question. These 1099s, okay, when you're doing the taxes, particularly if you're self-preparing, and all the tax softwares are different, but when you get that 1099, you want to make sure that in your tax software, you're actually filling out the section for 1099s for in every 1099 that you have. And it's going to populate in that, it should populate in that other income line. Yeah, I think it automatically, it depends on the software, goes there. And so that number one is where you're supposed to bring in the stuff that you wouldn't have gotten a 1099 from. Does that make sense? So you definitely, and to that point, because this has happened before, and it's so frustrating because I think it's nitpicking, but it is what it is. So you want to make, let me go back to the 1099s. If your software allows for you to enter 1099s, which it should, so that it populates to the right form in your 1040 packet, enter each 1099. Do not add them all up like that $30,000 I talked about. Do not add them up and put the $30,000 on line one. Now you may say, well, I'm not, it's $30,000. $30,000 is $30,000, right? It's the same number. So, because this has happened before in the past, right? If for whatever reason, the IRS will say, oh, well, we got $30,000 in these 1099s, but we don't see the $30,000 on your tax return. Now, you may say, well, yes, it is. It's on line one, right? But because you are supposed to be entering them in individually in your tax software to populate over and carry over into your Schedule C, that could be why you get a letter. Now, I'm not saying that I've seen that happen a lot, but I've seen it happen before. And so I just got to kind of, especially since we're now in this sort of, unpioneered territory where we're going to have a lot more 1099s, because of the rule this year. I had to share that tip. You want to make sure you do that.
Okay, before I get into the real love note they send you, the deductions. So mileage, is it the same thing this year?
Well, of course, the standard rate does go up and adjust for inflation. But what I do want to say for the mileage is y'all use those tracker apps. Right? Obviously, QuickBooks has a mileage tracker app. There are, oh my God, I don't know how many apps there are, but there are plenty of apps. Phone apps is what I'm talking about, that help you be IRS compliant on tracking your miles. Because mileage is probably the number one red flag that's audited. right?
Mhm.
So for my businesses, you know that you are having to get out here, especially my gig workers, your Uber drivers, and you guys almost have to, because I've seen 1099s from the various places that, and they do have your miles, so they really help you in that area. But again, regardless of who you work for, if they don't provide you with some kind of way in which you are able to definitively say this is what my miles were driven, then you want to get a mileage tracker app to make sure that should there be any question about this especially if you're doing actual mileage and you're not doing sort of that standard mileage deduction, that you have the documentation for that.
What and you tell me what this is good. Referring back to your Google Maps.
Mm-hmm.
Google has a track of where you've been every day.
Yeah. Well, so now, because I'm spoiled, I use a mileage tracker app, so I don't know how extensive Google Maps is. Like, I'm thinking you're saying that, okay, so here's my instance of where I've seen a business owner come in, and so now you're on Google Maps. And there are business owners that actually have a mileage log tracker now. Make no mistake, I've seen some people who actually have like a bona fide notebook in which they have kept track of what they're doing. And if that's what you do, absolutely. I mean, that's a way that you've tracked your miles. And so in that instance, obviously you're using Google Maps, you know what I mean, to verify that mileage. That's fine. That's definitely fine. So yeah, I mean, it doesn't, if you don't want to fool with the mileage tracker app and it's just easier, because really what we're talking about, even with record keeping, like how you keep track of your income and your expenses, what we're talking about is do something that you know you're going to do. So like if it's the spreadsheet, if you know that every day or every Friday or whatever your system is that allows you to know, oh no, my spreadsheet is the bomb, I got everything, hands down, that's cool. If you know you're not going to do that though, then you need to find a product that's going to make it easier and more efficient for you to have that. And typically that's a cloud-based product, especially when you connect it to your business checking account, because it's going to have all that stuff coming into whichever product you do. And the same thing for the mileage tracker. If you know that you're going to do that notebook or whatever it is your system is, by all means do that. But if you know you're not going to do that, then you need to use a mileage tracker, because we have to do it. We have to do it in order to make sure that it should any, like you say, love letter come from the IRS, that you're able to send another love letter back or a breakup letter saying, nah, leave me alone, I got myself together.
Now here's a big thing, because we, as business owners, we always do this. We taking folks out to eat. What's up with that this year? Because I read somewhere where they was deducting up to 100% or 50%.
Jarvis, you always make me laugh. It's hard to say. So yes, there are different levels in order for your meals and entertainment to be 100% deductible. Here's what I'm going to say is going to be a general rule of thumb, in all seriousness. Especially most of us, like, that's all we do is our business. So if you're taking, whether it be someone who's doing a service for you, or just whoever you have in your party, and you're having a meeting about your business, it's deductible. That's a business expense. I've heard and actually done where, depending on the industry, like let's say realtors or really any industry, you make your money based upon networking. You make your money based upon, okay, I have got to get my face in front of somebody else's face in order for me to make money. And usually that's over a meal, right? I mean, especially here in the South, like usually that's over a meal. Well, there's definitely enough evidence there, because that's the way that you make your money, for that to be 100% deductible, because that's a business expense. You are talking to that person that you've taken out for lunch. You're talking about your business. You're trying to seal a contract. You're trying to get a deal. So that's a business expense, right? But if I mean, seriously, like if like me, like I'm taking my kids out. Okay, you know what I mean. So just be honest about, you know, what you're doing when you're spending that money at a restaurant or some other type of entertainment. You want to make sure that you are transacting some kind of business for that.
Okay, and I want to list this too because this falls in, I'm gonna say, my profession. Please tell people this next thing I'm about to explain. Marketing is a tax write-off, but how
It's a
much?
business expense, yeah. Because
Okay.
it's the same thing that I just said about I got to get my face in front of somebody else's face. So like we know we're doing this virtual. Like our first interview together, you were right here in the office. Like COVID is still going on, and even though different states, you know, are changing things, you don't have to wear your mask, all the rest of that stuff. A lot of businesses, even the huge businesses, are opting to keep everything virtual, like you're working from home. So when you do that, now our responsibility is, well, I got to make sure that people are seeing me. Like how can people know I'm out here, right? And so that's why you do interviews on podcasts. You it's no different than like a Facebook ad or an Instagram ad, or a fly. Whatever you're doing as far as marketing, like you're trying to get your business's name out there because that's how you make your money. That's marketing. That's a business expense.
Okay. I just wanted to make sure you all know that. You know,
What you say? So when I see, so when you send that invoice,
yeah, they see it.
that's a marketing expense.
Yeah. So another thing too, I want to go back, like you said, tracking software. And you can probably back me up on this. Yeah, it'll flow from it, but double check it because sometimes in them systems they can misclassify things because they can say you're doing this
Absolutely.
target for I ain't gonna say postage or something,
Mhm.
supplies, and it really
Mhm.
was another food or something, grocery or
Yeah.
something.
Yeah, absolutely. That's perfect because that's true. So even if you're using Wave or QuickBooks, any of the cloud-based, and you have your business checking accounts, credit card, business check, credit card, anything business, because I got to say that. Don't have no personal accounts in there, just your business accounts connected to your cloud-based accounting software. That's number one. All right. So once you do that, yes, it is going, you maintain the connection because sometimes, especially with the credit unions, for whatever reason, I think it's just really security issues. Sometimes your bank account connection breaks. Especially with QuickBooks, which means that it's not connected. And so your transactions are not coming over from your bank account to QuickBooks. So that's a number one problem. And so when you log in and you see an exclamation point that shows, hey, something's wrong with your account, your bank account connection, you need to reestablish that connection immediately because those transactions are not coming over. So that's the first issue that could happen when you're doing your own bookkeeping. The other thing is exactly what you said. So because these are cloud-based accounting written on code, the code tries to be helpful to help you classify these things. And then sometimes it's not perfect. So you do have to go in there and check it because something that may be postage will come in as food. I mean, it can't be perfect. You're going to have to, it's not a set it and forget it, right? You're going to have to go in there and classify your accounts. And we actually do, I'm kicking off a DIY membership in which I work with business owners that want to drive on their own in their QuickBooks or anywhere else, and that's totally fine. But we every month get together and make sure that you are being able to ask me questions. We're troubleshooting certain things to make sure that you really have a healthy, functioning QuickBooks account or a Wave account or whoever account.
Yeah, I want to put that in there because I've been to one of your sessions before. She does really great sessions. But what you mentioned earlier, and I'm probably gonna get you to laugh again, that is an important topic for a lot of us solo business owners that have I'm gonna do this office. Can you please explain the home-based office?
What you listen?
home-based, I'm doing this for home-based office. And what can you write off with your home-based office?
So here's the thing. This is bona fide, legitimately a write-off, though. So technology might get the best of us, Jarvis. Pause and letting you know that my phone is going dead. You want to pause so I can actually go get my charger?
Yeah. We're gonna pause this real quick.
Okay. Hold on.
All right, we back. So we're gonna, like I was telling, because you had to go get the charger real quick, because some of us might be doing it from home base. Please explain the home base office deduction. What the IRS constitutes as?
Yes. Perfect question. I actually have a podcast episode where we go over all of that, but let me give you the straight to the point. So this is a legitimate deduction that you can do. And I actually, applied the IRS for updating this because before, I remember a time where you could only do this deduction if you were a homeowner, right? But now, actually, if you're renting, so it's for homeowners and renters. If you are conducting business in your home, in your space, then you can do the home office deduction. All right. So let's talk about how. And really, I want to help you understand the formula. So in order to do that, you need to be able to tell the IRS how much of your space, like there's a formula that you have to follow when it comes to how much of your space in your home is business. So what I use in the podcast episode is, let's say your home is 10,000 square feet and your business space is 5,000 square feet. We live in large, right? So that's 50% business. Mm-hmm. Right? So when you think of home-based business, I want you to think of what percentage of your home is business. Okay. And the way that you do that is square footage. Mm-hmm. If you're in an apartment, then usually the layouts are on the property manager's website. If you have a home, usually you have that also when you purchase the home. So it should be fairly easy for you to know the total square footage of your home, as well as in comparison to the percentage of your business. But that's really how it works. Now, there is a standard deduction. Okay. If you know that your space is 300 square feet or less, your business space. So if your business space is 300 square feet or less, then you can do the standard deduction for that home-based business credit. All right. So, and it's $5 per square foot. So that will give you a max of $1,500 as the deduction. However, if, like we had used before, if you have 5,000 square foot, that's your business space out of your home, then you don't want to take the standard deduction because, you're not going to get the full amount that you're eligible to deduct. And in that case, now we're bringing in some other factors, because now that you're over that 300 square feet, and you're doing sort of an itemized actual type of calculation, now we bring in, after we determine it's 50%, now you can do 50% of your utilities. So internet, if you have security, because most folks that, work from home, especially if you have people's personal information, there may be a requirement that you have some secure space. So that could be your alarm, if you have to have a secure file cabinet, whatever it is you're having to do, those are bona fide expenses that come on deck there when it comes to that 50%. So 50% of your internet, 50% of your utilities, 50% of your mortgage, 50% of your mortgage. You know what I mean? You get the point. So that's how the home-based business deduction does work. And because of the reality that, again, most of us are working from home, and that you really don't have to have a brick and mortar, just in response to the new reality that we're living in. And so if you're using your home, then you want to make sure that you can use that home office deduction.
Okay, and I think another thing I want to go into before I finally get to the love note is how we paying ourselves in 2022.
Okay.
what business owners need to be doing?
Okay. That's definitely the most popular question from the small business community because people aren't talking about that enough in detail to us, right? And so I have a whole entire training on that, but let's talk about this because this is where you have to start from your business entity structure. And this is just because I want to make sure that y'all are doing this the right way. Okay. So my answers come strictly from, we're not taking no shortcuts. Let's do this the right way. So in order for payroll to work, and I mean formal payroll, I'm not talking about owner's draw. When I hear payroll, I think of W-2. Like it's time for your business to put you on a W-2 and your family on a W-2. Like everybody, you know what I mean? On a W-2, like you're creating jobs because your small business can absolutely create jobs. So we're talking about W-2. So in order for you to really be in the best way position to do that, then I need for you to be filing as an S corporation. Now, let's talk about that because a lot of times when I get a business owner, they've actually been in business as an LLC for some time, right? And there are SBA guidelines for when you can actually file taxes as an S Corp. And so what that is 3 years and 75 days from the date of formation in your state. So if you started in Alabama in 2022, you have 3 years and 75 days from the date of formation with the state to request the IRS for permission to file as an S Corp. Now, like I said, it's not, oh my God, it's the end of the world because I've missed that time. You just know that you're gonna have a level of double taxation. And that's where we really get into the weeds and try to get it down as much as possible. But you still can have a formal payroll. Okay. So all is not lost. But especially when you start bringing in, because we're claiming some bags this year, you want to make sure that you are in the right position so you don't get that love letter that I think you're about to ask me about. I don't know what this love letter is about. But anyway, so yeah, ideally, you want to be able to be filing your taxes as an S Corp because when you're doing that, the IRS has these expectations that as an officer and owner, eventually you're going to be on a W-2 anyway. That's a part of the requirements for filing as an S Corp is that you eventually are going to be on a W-2. So as you can imagine, where I'm going with that, when you're on payroll, you're eliminating, like really, the main tax that you're eliminating is that now you're on an 1120S is you're avoiding self-employment tax. And you're avoiding self-employment tax because on payroll, you're paying it in FICA. Because the self-employment tax is the business owner way of paying into Social Security, right? But if you're on W-2, and rightfully so, why would you pay both, right? So that's the main advantage that people experience when they start filing as an S Corp. The other advantage that I really want to drill in is, oh my gosh, it sets the framework for you to be able to have a self-employed 401k. You can have health benefits. Oh my goodness. I mean, just like you're working for any other person, like your business will be able to do that when you get into that form of payroll structure. And lastly, what I'll say about payroll, because some of my new S Corps had some real anxiety because they were like, okay, so I'm gonna do what you say about the payroll, but then you're like, okay, well, what if I don't have any money to pay myself? Right? So I want to disarm you. And if you were thinking that, don't think that because you're the boss, right? You're the boss. So if you tell me I want to start payroll and I'm paying myself $80,000 for the year, all right? Okay, but life happens and it's no money in the bank for you to pay yourself. Well, then skip payroll. I mean, you know what I mean? You're the boss. It's your business. You're not going to run payroll if it ain't no money in that account. So when you do get the money, 'cause especially if you're contract based, or again, if you're have to go out and get clients like we do, you know, you want to make sure that you're just think of payroll as a tool, not an obligation, a tool in which you are, particularly for you, you are in a legal way being compliant with taxes and trying your best to pay as least amount of taxes as possible when you carry that over into your personal tax return. Because as an SCorp, if you have $29,000 in profit, that whole $29,000 is untaxed money that's going on your personal tax return, and that's a tax bill all day. So why not use payroll to go ahead and have some federal and state taxes already taken out throughout the year? So when you then go and file your personal taxes, you now have federal and state taxes that you're claiming because your W-2 from your business is going to show that. So yes, you definitely want to do that.
Now, I know you said about the SCorp, but what if, let's say, if you're an LLC or just main situation?
You're filing on a Schedule C, yeah. So for the clarification, an S-Corp is, unless you're, now corporations can file as an S-Corp, I've seen that. But typically, the legal entity structure is an LLC. S-Corp is not a legal entity structure, it's a tax filing status, right? So that you have to request from the IRS to be able to file with. So you're always an LLC, but so most LLCs, because nobody in our community has been, you know, dropping these gems and you know what I mean? You didn't know about S-Corp. A lot of folks are like, oh, I saw it on social media, but you know, it's like that click and bake. You don't get enough information, so you don't feel comfortable doing it. But now you're getting that information, and you may say, well, Talibah, I've been in business for more than 3 years and 75 days, so I'm not going to be able to file as an S-Corp. Now, depending on what you have going on, it may be more valuable for you to actually convert your business entity into a C Corp, but we need to sit down and talk about that, right? You do have the option of doing that. However, you know, that's where I was saying that even if you are I try not to do this, but, you know, again, by the time I get folks, we're past the 3 years and 75 days. So this is where, you know, you will be filing on a Schedule C, but we can still do the payroll, but it's a lot of other factors in there because you're still going to have self-employment tax, especially if you are, you know, still profitable after your payroll. So it could get a little complex, but it's definitely doable again when you're working with someone who knows what they're doing.
Okay. All right, Talibah. So let me pose this. What if somebody did not set up as a S-Corp yet on the LLC, they're just a regular LLC? What are some different ways from what I read? You tell me which one of these ways work or not, whether it's, you know, is paying themselves, even writing them a check from themselves to the business account, or either transferring the money, or, I mean, what other ways can business owners do that if they don't do the S-Corp situation?
So that is a very good question. And particularly when it came to satisfying the owner's draw rule, the owner's pay rule for PPP, that's where that practice became more widely known. I mean, most folks have always been doing an owner's draw. And so when it came to PPP, we had to be more specific on how to show that on a paper trail so that it's actually considered owner's like form of payroll. So to your point, particularly with PPP and what the federal government wants to see, should there ever be a question about, particularly for our solopreneurs who don't have a formal payroll, did you pay yourself? Yes. That's what the federal government will be looking specifically for. Should you get a letter to say, did you use PPP correctly? How are you paying yourself? So that can be transferring from your business checking account to your personal account, okay? Or writing a check, yes, from your business checking account, and you actually depositing it into your personal account. So that is where the practice of I would say being more clean, establishing a cleaner transaction history when it surrounds owner's pay came into practice is when a lot of the solopreneurs were getting PPP, and we were advising them that you want to make sure you are doing it exactly like that to denote a owner's draw that's clean cut. There's not any question about this being owner's draw. And then you would just denote how much you paid yourself in that instance and make sure that you're also denoting that on your tax return.
Okay, and so I want to get to now the part that we've been joking about. When you get that love note from the IRS, some people call it the auditing letter. What should you do?
Well, you definitely want to respond to it.
Okay.
I mean, so let me say this when it comes to the audit letters, and this is even from the state, which I know we need to do a whole nother episode on specifically for Alabama listeners. But I know I jokingly said, make sure you respond. The first thing though, I want you to think about when you get this letter is that it's not the end of the world, because just because you get a letter doesn't mean that the assessment is correct. That's the first thing. Because we have absolutely seen some love letters, asking for folks to produce this or saying, you have underreported income. Remember, we talked about that with the 1099s. And you basically have to prove them wrong. So that's the first thing that I want to kind of just throw out there is just because you get a letter doesn't mean it is right. So, but if you have too much anxiety or, it's federal gibberish to you, you're not understanding what the heck they're talking about, then you want to get with someone who actually can help you navigate specifically what they have said you did, incorrectly, or that they still need from you to process your tax return, and then you complete it. But that's really what I want to say, is I have seen more incorrect letters than correct letters. Okay. So that's the first thing. To that point though, you want to just do your best in producing that document. And it really is just unfortunately going to depend on the specific person who has been assigned to your audit. But particularly if there is, I can give an example, the 1099 example that I mentioned, and I definitely want to kind of rehash, especially considering the fact that we're going to see a lot more 1099s next tax season because of the new rule. You want to just make sure that you, again, don't add all those up and plop it on your Schedule C. You want to actually fill it out, especially if you're doing a Schedule C, because I've seen a letter that will say, we received these 1099s and we don't see where you filed it on your tax return. So that letter was incorrect. Now, even though they did not do the individual 1099s, which added up to the other income line on the Schedule C, they still claim all the income that they made. So you just have to reply in the letter, showing them everything that you did, and even saying, well, we just added up the 1099. You know what I mean? And but 30,000 is 30,000. And it's not going to affect the outcome of this tax return because I actually did claim the income that you guys have on your side. And then you send it back, and let them do the assessment. I've seen where you can even dispute late fees. I've seen where a nonprofit was assessed a late penalty for filing a 990 late. I've seen where an SCorp has filed late. And if you have a bona fide reason, you know what I mean? Just write a letter back. Try. Nothing beats a failure but a try. So that's why I want to give those examples because, just because you get a letter doesn't mean it's the end of the world. Now, if it has something to do with, with tracking, like tracking something like, well, you claimed, let's go with the mileage. You claimed a $5,000 write-off for your mileage we need to see some documentation of that, right? Then you want to do your best to show what documentation you used. But really, I think, that the context of these letters and what we're talking about is if we flip it on the other side and actually use these as, this is what I'm going to do to avoid this letter, or should I ever be called out and get a love letter, I'll be ready. That's really how I want the listeners to look at it, because you could get a letter for anything. The IRS can go back, I think it's 6 or 7 years, so you could get a letter for anything. So you want to make sure you keep your documents as long as possible. Again, in my opinion, particularly with providing documentation for your write-offs, that Excel worksheet is good. But cloud-based accounting connects to your business bank account, which is matched by your business checking account statements. You know what I mean? Like, that's a electronic and a paper trail. So especially if you're using, like, QuickBooks has the feature of taking a picture of your receipts, like that's going to be in the cloud, So really, I want us to look at these love letters like, I'm ready for it, because I have my stuff, as efficient as it can be. And even when you don't have it as efficient as it can be, still just respond with what you have. Because let's say that the assessment is that you owe $2,000, because they're saying, you shouldn't have written off the $5,000 in the mileage. And let's keep it real. Let's say that you start that log we talked about, that notebook, you actually have some transactions on there, but you didn't do everything. Okay, well, respond back and send a picture of what you do have, because instead of on the $2,000, maybe you'll owe $1,500. That's $500 you save. You know what I mean? So just look at it that way.
Okay, and I guess we reached finally, because like you said, we could talk a lot of this last year. Any final thoughts you want to add if business owners want to get in touch with you?
Absolutely. So, as y'all can see, like whenever we're talking about small business owners, I'm just like locked in, high vibration, because this is truly, truly, truly what I love to do. And, have built out a team to help support what we do. And so that's why, again, you have Bankable CEO t-shirt going on. We have an entire initiative. I have started a nonprofit as well, a sister organization, in which we are right out here on the front lines, not only just here in Birmingham, but across the U.S. And we are getting business owners bankable through these things that we talked about on What's Happening Birmingham podcast. And that is tax compliance, bookkeeping, record keeping. When we talked about the SCorp stuff, that's tax planning. When we talked about payroll as a tool, not an obligation, that's tax planning. When we talked about these SBA loans and grants or whatever, that's access to capital. So we have fortified all of those things. We're getting a business owner in here, in this ecosystem, providing those services, the education as well, and then connecting y'all to this money, whether it be the local banks here in Birmingham or just banks across the United States, or ultimately the federal government with the SBA. That's what we're doing. So that same link I gave before to get on my schedule for a consultation, that's tmbtax.info/schedule. tmbtax.info/schedule. Get on that schedule. I also encourage you to follow me on social media channels, TMB Tax, if you see the theme here, on Instagram. I do a lot of these type of posts. We have a brand new podcast, the Black and Bankable CEO podcast, which is on YouTube, where I'm sharing this type of information and giving you opportunities to work with me. And I'll make sure I put some of the other links under this video when you post it, Jarvis, so that folks can know exactly how, what options they have in working with me, the business owners.
Okay, and yeah, I want to thank you for coming on too, because like the main thing I want to tell you all business owners, she can probably match up, that just tell them what you got. Show them what you got. Tell them what you got. The Cash App, the PayPal, y'all. Just you can't hide it no more. Even was hiding it. They gonna find out this year.
Well, and that's the thing. I mean,
Well, one thing about us, we know how to do workaround. But the thing about it is, we so people will probably try to believe that they have found this workaround. But in the long run, that workaround actually ends up hurting you. You know what I mean? You may get that short-term satisfaction that, oh, well, I ain't get that 1099. But then when you turn around and say, I need, to prove my income, you also don't have the ability to prove your income. So this is a judgment-free zone. As you can see, I'm a small business owner. I have small business owners in my family. I specifically work with Black and minority owned businesses. So it's not too much we haven't seen. But just like Jarvis said, when you're ready to be vulnerable and you're ready to roll up your sleeves, just know that we're here for you. But I don't drive anybody's car. You have got to be ready to commit to do the things that we know you need to do in order to get you to the money, because we're definitely doing that. But you're gonna have to change your learned behaviors to know that I've already told you it's not a judgment zone here. So change your mindset, change your learned behaviors. Let's fix anything that you need to work on. And we don't have to do it all at the same time. If it's a lot, we could do baby steps. But the bottom line is we're here as a resource for the Black and minority owned business community to get you to where you need to be, to get you bankable so that you can continue to be the business owner you're chosen to be, to provide for your family and your community. Okay, well,
Talibah, thank you again. As you all know, as you probably won't notice because I'm so perfect with the editing somewhat. We do several segments. We actually got one more little segment for you 2020 people coming up that I'm not going to make sure we got to do this. But thank you all for watching this video. Please check out what's happening Birmingham.com for more interviews. Don't forget to subscribe to the YouTube channel. And I told y'all on Apple Podcasts. So for all y'all that got that iPhone, please join that channel because I got to pay for that channel now. So thank y'all again. Have a great day. Bye-bye.
Thank you for watching the What's Happening Birmingham video podcast. Please check out our website, app, or subscribe to our YouTube channel for the latest videos today.